Get assessment from Andy Sear. He made waves for predicting last year's economic meltdown. Andy is now an independent economist and a former top analyst at Morgan Stanley. Andy, given China's latest manufacturing data, does it look like China's economy is at a crucial stage, moving from perhaps recovery to stability?
Well, I think that the economy has been growing, recovering very fast. And I think that this year it's going to be okay. I don't think it's going to grow as fast as last year, the second half of last year. But I know, considering the liquidity is still plentiful, so I think that the economy is going to have a reasonable growth.
Just okay, but China's central bank advisor, Fan Gang, he's now saying the country is emerging from a crisis and getting into what he calls a boom time. What policy implications are there? What do you make of this reading?
Well, I think that on the domestic side, investment is overheating, in particular on the property side. But for the economy as a whole, because the export sector is so large, even though the export sector is recovering, but it's unlikely to grow very fast because of the poor employment situation in the United States. So I think that the domestic side is overheating, and the monetary policy has to be tightened up. Otherwise, the bubble can get out of hand.
Andy, you touched on the U.S. China is the biggest U.S. creditor. What do you think it makes of Obama's $3.8 trillion budget? I mean, with a record budget shortfall of $1.6 trillion.
Well, I think that the U.S. Treasury yield will rise. I don't just think that the appetite for for the U.S. Treasuries here is that strong like before. So with such a huge deficit coming, I think that the U.S. needs to pay more to get the money. So the Treasury yield should rise significantly this year.
So you're saying that China will not continue to buy U.S. Treasuries, or perhaps buy less of U.S. Treasuries?
I think it's just there's a price for everything. Considering the supply, I think that the people here just need higher yields to buy the same amount or buy more. So that's why the right call is the U.S. Treasury yield should rise.
Andy, we know that investors are pulling cash out of Europe at a record pace as central banks slow euro purchases. I mean, how aggressive should the PBOC's tightening be given this particular scenario?
Well, I think what's going on in Europe might have an effect, but it's going to be marginal. The China's situation is very much related to the property sector and the local government investment, and both sides were pumped up tremendously by the excessive bank lending. Now, with all these projects that have been started, so we're in a really dilemma. Should the banks continue to lend, and that will lead to a huge bubble and an inevitable crash? Or should the banks stop lending, and a lot of projects will be kept on hold, and a lot of waste? So I think it's really in a delicate situation here.
A delicate situation, but what's your own take on it? What do you think the banks should be doing?
Well, I think the government is trying to strike a balance. They don't want to cut back funding quickly. They're trying to slow down the funding. And so the government is talking about a 17% loan growth rate. That would amount to about 7 trillion or so. Last year, the bank lending increased by nearly 10 trillion. So it's still a significant cutback, but it's not a dramatic cutback yet.
Of course, we've seen markets selling off because they're concerned about the tightening that they expect China to do pretty much soon. Your take on it, do you see this sell-off tapering off soon enough?
Well, I think the government wants the bank lending to cool. They have not increased interest rate yet. So the market is falling because of its anticipating interest rate going up. So I think the interest rate will go up, but it will not go up dramatically. I expect the interest rate to be raised by 2 to 3 times. So it's not dramatic for China's economy that is growing at such a high rate. But because the market had such a high expectation, so that's why the market is pulling back. The market thought there would be no monetary tightening this year. but there is coming. So that's why the market is falling.
Andy, is there really an asset bubble in China? I mean, property prices in China are still not as high as those in Australia as well as the U.S. Are concerns overdone? Are concerns overblown? Should we fear it could lead to a U.S.-style real estate slump?
Well, I think that the data on Chinese property sector are really difficult to come by. So the numbers you just quoted, it's hard to tell if they are true, correct or not. As far as I can see is that the property sales, new property sales last year reached 14% of GDP. This is unprecedented. And then the other is that the rental yield is extremely low at 2 to 3%. And the vacancy rate is very high. We don't have reliable data on that. But the amount of vacant properties in China is sold, but vacant is humongous. I think that there is a bubble. And I think the property price might be 100% overvalued.
So help us understand, why then is China set to have its biggest land sale happen today despite talk of that asset bubble you're expecting or you're seeing? How do we reconcile the two? How do we make sense of it all?
Well, the property bubble in China is different from the U.S. or Japan's before. China's property bubble is really about the new properties. It's not existing properties. And it's about the local governments get most of the money that buyers put into the market. So it's really a fundraising operation for the government. And the local government's fiscal revenues depend very much on the property sector. Possibly half of the local government's revenues is from the property sector. So that's why they continue to push for land sales at regular prices. I think there is some sort of kind of struggle between the central government and local government. But the bottom line is that the fiscal situation in China as a whole is very dependent on the property sector.
Of course, we've heard Premier Wen Jiabao saying that he'll stabilize property prices, he'll crack down on speculation to keep housing affordable. Do you see enough signs he's working towards keeping his promise?
Well, we're seeing some significant measures that have been introduced in the last couple of weeks. It's in particular on the second flat or third flat. The mortgage conditions have been tightened considerably. Indeed, if these changes are implemented, the demand from third flat buyers is going to dry up. It's going to have a major impact on the market. The demand side, it's dominated by the speculative demand. It's like the people who buy second or third or fourth flats. Now, without bank lending, it's very difficult to see this demand to continue this year. So the developers who are paying regular prices for land might get trapped this year. And so far, in the last 7 years, the prices have kept going up. The land prices has gone up by over 10 times. In some cities, by over 20 times. So the property developers believe that land price should always go up. But this time it may not be so. I think that the people who are paying such high prices could lose big money.
Andy, in the commodity space, I mean, China has deep pockets, has been buying resources. We've seen that happen lately. Do you see that happening, continuing in 2010?
Yeah, I think so. I think the resource sector story is much more long-lasting than other stories like the economic recovery story or the property story. China has a huge resource shortage, and it's got a huge foreign exchange reserves, and so a significant amount of their money will be put into the resource sector. So I think that it's not just a 2010 story. It will last for the next few years. This is the only story that I have faith in.
All right, good stuff. Independent economist Andy Xie, thank you so much for your insights on the trade today.